ಪ್ರೇತವೋ ಭೂತವೋ ಪರಲೋಕವೋ ಪುನರ್ಜನ್ಮವೋ ಅದೇನೋ ತಿರುಗಿ ಬಂದವರಿಲ್ಲ ವರದಿ ತಂದವರಿಲ್ಲ ಧರೆಯ ಬಾಳಗದಿರಿ ನಿಮ್ ಮಂಕುತಿಮ್ಮ. Very good evening members. CA Ravindra Kore, Chairman of Bangalore branch of SRSHP ICI, wholeheartedly welcome you all for this 8th Jnana Dasoha live webcast session from Bangalore branch. The today's session, it is enriching to an 88 number, and some madam is going to taking this session on subject the QRM scheme under GST for GSTR 1 and GSTR 3B. It's a happening city, and our Karnataka earlier is to be called as Mysore state. So from Mysuru, we are having Madam CA Annapurna Srikanth with us. On behalf of all the viewers, managing committee members of Bangalore branch, I wholeheartedly welcome CA Annapurna Srikanth for the today's session. Welcome you, madam. Dear members, on behalf of managing committee members of Bangalore branch, I wholeheartedly welcome all the active members of Bangalore branch. Because of you people, our Bangalore branch programs are been getting success day by day. So on behalf of managing committee, I wholeheartedly welcome all the viewers for the today's session. Dear members, kindly make note that from 10th to 13th, we are having SIRC 52nd SIRC regional conference in virtual mode. I request all the members to register well in advance. From today is on 4th December. After that, we are planning to have one program on 7th, Vivase Viswas scheme. All the principal CCITs and principal commissioners are going to address on Monday 4th. It is a special request from the department. Bangalore branch is planning to conduct. By today or tomorrow, we'll get all the program details. Apart from that, our next Jnana Dasoha live webinar will be on again 15th December. Till that, we are all concentrating on the 52nd virtual conference of SIRC. So once again, I request all the members to register for the SIRC conference. Dear members, coming to today's topic and speaker, Madam Annapurna. It's called Annapurna. Everyone may aware in pandemic time how it is important. So she is also conducting today's Jnana Dasoha for Jnanapurna today. Can say it. So she has accepted our invitation and delivering lecture for all the members. Definitely a knowledgeable personality, a very simple personality and humble personality with us. So once again, I welcome CA Annapurna madam for the today's session. Members, kindly make note that it's 2 announcements. 7th, there may be session. We are planning that for the department. All the main commissioners are addressing on Vivase Viswas scheme. So today's topic is again GST. The GST is when 2017. GST is launched. Before that and during that, there are team from Bangalore, from Karnataka worked a lot under the leadership of Madhukar Hiregange. One of the team member is CA Annapurna. Definitely, she is truly delivering her Jnana Dasoha, and that's a very unique number. Today is 88th session. With that note, I request CA Panindra Gupta to formally introduce the today's speaker to all the members. Over to Panindra.
Thank you, Kore sir. So our today's speaker, CA Annapurna Srikanth, is from City of Palaces, so that is Mysore. So she is practicing since 12 years, handling direct and indirect taxation, audits, consultation, and litigation. CA Annapurna has been an academic achiever, securing All India third rank in all the 3 professional qualifications, namely CA, DISA, and Company Secretary. She was the Vice Chairman of State GST Committee of FKCCI in 1819 and also co-chairperson of Women Entrepreneur Committee of FKCCI during 1920. She is an empaneled member in the faculty of Indirect Taxes Committee of ICAI, and she has conducted more than 170 programs and still going on. And she has contributed to various books like GST and Abridged Compendium and Synopsis to GST Law. So, and also She has contributed various articles on GST in e-magazines of professional bodies. She has developed many handy templates, trackers, compendium, and other resource materials on GST. She is a knowledge partner for an app called GST titled Insta GST, which has various verticals like Insta Legal, which is a repository of GST content, along with other verticals like Insta Tools, Insta Q&A, Insta Articles, and Insta Hub. She has bagged medals, awards, and certificates and felicitated by various professionals, public and private organizations, to name a few. Silver medal by ICAI and also ICSI for securing All India third rank, and gold medal and excellence award by Vasavi Union Bengaluru, Women of Excellence Award, and many more. So with this brief introduction, I wholeheartedly welcome today's speaker, CA Annapurna Srikanth, for today's session, and over to you, ma'am.
Thank you very much. At the outset, let me thank Bangalore branch of SIRC of ICI for inviting me to be a resource person for today's webinar on the QRMP scheme. I also thank Mr. Ravindra Kore, the chairperson, and CA Panindra Gupta, the SICASA chairperson, for extending such a warm welcome to me. So without wasting any more time, let us get into the today's presentation. So in today's session, we would be dwelling in through the entire scheme, monthly payment scheme, the applicability, the eligibility. We will also go through the procedural aspects, implications on GSTR 2B, interest and late fee implications, the suitability and benefits, and also we will be covering certain precautions to be taken, and the legal provisions under which this scheme has been enabled. At the end, we will look at certain myths and realities and what are the action points which would be required from the complier perspective. Before getting on to the session, I would like to give a preamble, entire session as to why this QRMP scheme was probably required or introduced. The whole exercise of electronic mechanism along with the digitization, where the matching concept under which GST was envisaged, we had initially the GSTR 1, 2, and 3, which was conceptualized, but there were a lot of challenges in the implementation. Probably owing to that, we keep hearing that so many scams under GST are happening because of non-matching of this multiple source of data, like the content that goes in GSTR 1 is something different, the content that goes in GSTR 3B is something different, and although the other person gets a reflection of in his corresponding GSTR 2A or 2B, but the actual taxes might not have been paid. So probably to integrate all these forms, the GSTR 1, 3B, as well as the 2B, the 2A, now the new avatar of it being the GSTR 2B, probably that is one of the reasons to, integrate all of these to have, better kind of a perspective that such kind of evasions or, scams does not happen. Probably this is the thought process from the government perspective. At the same time, they probably want to give a kind of ease of operating, in the sense that every month if this kind of a task is put up on the compliers, that might be a burden on them to facilitate this quarterly compliance. And so even GSTR 1 and 3B both have been moved to a quarterly compliance. We look into the detailing of this scheme as we move through this presentation. But to my mind, this appears to be the agenda behind the introduction of this scheme. And going ahead, things are going to get integrated, with the, as we are seeing, e-invoicing was implemented for 500 crore and above aggregate turnover based SSEs. Now from 1st of January, it is being reduced to 100 crore plus turnover. Probably in few months or in a year to come, that might get nailed down to all the B2B transactions. So that looks like the way it is moving. And in that perspective to connect all these various forms, the scheme would have been introduced. Now let us try and understand what exactly is this QRMP scheme. Firstly, it is an optional scheme. If you want to continue file your GST 1 and 3B both monthly, there is no restriction as such. It is a purely optional scheme. You can either opt for this QRMP scheme or continue with your monthly filings as you're doing now. Now, since it is an optional, who can get this option? This option is available to a limited class of registered persons. Who are this class? The aggregate turnover during the preceding financial year plus the current financial year. We should note that both the criteria needs to be fulfilled and it should be up to INR 5 crores. And section 2 subsection 6 of the CGST Act defines the term aggregate turnover. This needs to be consolidated PAN wise, meaning if I have 10 GSTs under the same PAN, what we call as distinct persons under section 25(5). So we need to consolidate the aggregate turnover of all the GSTs, then determine whether at all they cross this threshold of 5 crore or not. If they do not cross it, then they are eligible to come for this QRMP scheme. And point to be noted here is both GSTR 1 as well as 3B is required to be filed quarterly. However, the name of the scheme itself indicates quarterly return monthly payment scheme. Hence, payment of taxes has to be made monthly. Now, there are two options for the payment. The one is a fixed sum method and second method. Many of us might be wondering, we might have got a question that if taxes are paid to be monthly, is this scheme serving some purpose at all? Many times when we do the compliances, our officers, the team who works for compliances, it's always like they go behind the clients and they give moment compiling that information. It's such a pressure or kind of a lot of work piled up towards the end of that deadline period. So if we know that there is a approximate value of this would be the tax. In case of uniform trend businesses, probably this could be quite useful. I've also discussed in my next slides as to for which kinds of businesses this scheme is useful. So at that point also I'll try to reiterate this point. The point is that I don't want to compute or to evaluate every month how much tax needs to be paid based on the books of accounts, because I get those details in a delayed manner, or compiling that on a month-on-month basis is going to be a challenging task. So for whatsoever reason, I may go for a fixed sum method where based on my previous payments, there is a tax outgo which will be determined for the first 2 months of the quarter. Meaning thereby, last quarter, let us, again this can have a possibilities. The last tax period I had opted for quarterly, but presently I am again going for the quarterly. In such a case, the previous tax outgo for the previous quarter, 35% of whatever I discharge through cash portion, that is by depositing into my electronic cash ledger, whatever I did for the last quarter. So out of that 35% I need to pay for month 1 and month. Third month we will compute for the entire quarter and file the 3B itself. So we will also discuss about how this payment needs to be made. If I do not want to go for this fixed sum method, because mine is a seasonal business, every month the kind of sales that happens differs, then I may go for self-assessment on and I can make the payment of my outward supply plus RCM liability by reducing the eligible ITC along with the balance in my electronic credit ledger, and on the actual basis I can make the payment. This is to just give a brief overview of what is this scheme all about. And this scheme is effective from 1st January 2021, meaning thereby for the quarter Jan to March, if I am eligible, I may consider opting for this scheme. Let us look into those modalities. And Just for a change, I am discussing the legal provisions at the end. First, let us understand the entire scheme, how it works, and probably after getting a hold of it, we will discuss the legal provisions of it. Going through the section amendments and the rule amendments. Now, who is eligible? I already discussed. Firstly, the preceding financial year, if it has crossed INR 5 crore, I am not eligible. Again, as I said, it is aggregate turnover PAN based considering multi GST. Again, if it exceeds in the current year, I need to opt out from the next quarter, meaning thereby for January, if I've already exceeded by December, I'm not eligible. But in the mid of January, if I exceed 5 crore, for the next quarter, I need to opt out. There is another point here that the system will auto-migrate certain class of registered persons. Those who have already filed their GSTR 3B within 30th November based on a certain criteria. We will discuss that as well. However, if there is a delayed filing of October return, one can still go for manual migration. So the migration into this QRMP scheme can happen either automatically or even manually. So I've given the references of the legal provisions from there. This is now who is not eligible. Firstly, as I discussed, if the previous year or the current financial year, the aggregate turnover exceeds 5 crore, then such a person is not eligible. And one more important aspect is all the returns till the date of opting into the QRMP scheme should be filed. Now the question comes, what is return? As per the Act, return is used in the context of GSTR 3B. What if I have not filed my GSTR 1? GSTR 1 is a statement furnishing outward supplies. So we may not call it a return. So technically speaking, if I have not filed my GSTR 1 but filed all my 3Bs, then ideally I must be allowed to go for this QRMP scheme. But you always know that we have the GST law on one side while the GSTN law on the other side. Many a times portal decides on so many things. If it blocks the person from opting in because he has not filed GSTR 1, so it is going to be a wait and watch game for this to get it from the portal perspective. Let us look at a couple of illustrations to see who is eligible. Just taken 3 GSTs totaling to 6.5 crores. So this is not a fit case for QRMP. Second is a case where as per my so much, but as per my books, it is exceeded 5 crore. This is also not a fit case, although portal might allow. I am technically not not eligible for this scheme. I need to opt out. The third case, it falls within INR 5 crores. I am eligible to opt for. Further, one important aspect what we may notice, if I want monthly option for Karnataka GST, I can do that. And Goa and Delhi, I may choose quarterly because the volumes are less. So this option for QRMP scheme, once I am eligible within this threshold of 5 crore, I can opt it based on single GST invoice. So few I can go for monthly, few I can go for QRMP scheme. Now the second case, the current year turnover has exceeded. So again, I'm not eligible. Now in this case 5, although both my turnover criteria is fulfilled, but I have not filed my previously due 3B. By 31st Jan, I should have filed the December 3B. Since I have not filed the previously due 3B, I am not eligible to opt for this. So, for somebody to opt in for QRMP scheme, the compliance schedule should be clean. They should have filed up-to-date returns to enable them to opt in. So, I was talking about this auto and manual migration. Let us look at it. In fact, notification 84/2020. It talks about, rule 61A, based on which this auto migration and the default option which happens. Friends, we are aware that previously with respect to GSTR 1, there are available quarterly or monthly. That is for up to 1.5 crore aggregate turnover criteria. So some of them would have following quarterly and some might be following monthly. So how will the system decide who will get into the QRMP scheme and who will not? There is this auto migration which system will enable. The first and foremost criteria is As you can see here, the October 3B should be filed within 30th November if you have to go, if the auto migration should happen. So the first point, if you have not filed your October 3B within 30th November, then there is no question of auto migration. You have to manually migrate yourself to the scheme. So let us presume a situation where the auto migration. Okay. Let us presume a case where the 3B has been filed within 30th November and previously, since their turnover was up to 1.5 crore, they had exercised a quarterly option. So the system will enable a QRMP scheme by default. Earlier, even though their turnover was up to 1.5 crore, they had opted for monthly. So there is this anticipated behavior of the taxpayer, and based on which the system will select automatically monthly. So, intermediary slab of turnover, who had by default gone for monthly, because earlier the option for quarterly was limited to up to 1.5 crore. That is why between 1.5 to 5 crore, they would have chosen this monthly GSTR 1. For them, the system will choose the quarterly option by default. This is a little, we need to pay a little attention here, because if we do not want this default option, we have to manually change it between 5th December to 31st January. That is, from tomorrow it will be enabled. If we do not change within 31st January, then by default, the option will be QRMP for the next quarter. As I said, let's say the October 3B was not filed within November, 30th November, then I will file, let's say on yesterday I filed those returns. So I can manually migrate starting from tomorrow. So you can see that I'll share the screenshot also. They've enabled an option, and they've said that from tomorrow you can start opting in. I've discussed this criteria. Now for the manual migration timeline, if you want to opt between 5th to 23rd December, the October return should have been filed. You return is that. Again, between December to January, November return should have been filed. Between 24th to 31st January, December return should have been filed. So this is the timeline. If you have not filed December return within 31st Jan, then you will not be eligible for this scheme. And this will be enabled from 5th December. As you can see here, under the Services Returns tab, there is this new option which has been enabled, opt-in for quarterly return. On clicking, you will get that screen which says that from 5th of December, either if you want to opt-in or opt-out, you can do it. So please check, especially if you are within the category 1.5 crore, system will automatically done. If you want to opt out, kindly manually opt out from this. Now, earlier we have seen that once we opt for quarterly GSTR 1, for the entire year that option will be valid. I can neither come back to monthly, nor I can continue the I can't shift over between things. Once I decide monthly, it will be monthly for the whole year. Once I decide quarterly, it will be quarterly for the whole year. Of course, the exception being once I exceed the 1.5 crore threshold. Now, the difference between the old GSTR 1 quarterly scheme and the new, for one quarter, you can opt for QRMP scheme. You find it is not comfortable in this particular case, then you may opt out for that and go for the monthly scheme. You can try on an experimental basis as well. For this quarter, let me see how it works. And if it doesn't work out well for you, you can opt out from the next quarter. You can plug in and plug out every quarter as per your wish. So at the quarterly intervals, you get this option. Jan to March, April to June, July to September, October to December. So you get this option throughout the year. Now, when I say throughout the year, there is a timeline within which I should opt in or opt out for the scheme. What is that timeline? For January to March quarter, within 31st, I need to opt in. Let us think about April to June quarter 2021. The option for opting in or opting out gets enabled from 1st of February till 30th of April. Thereby, 1st of the second month of the previous quarter to the last of the first month of the current quarter. So it will look like, I mean, it will sound like a, example to, facilitate the better understanding of it. This will be the same methodology for all the quarters. And does it mean that this quarter I have opted for QRMP and I want to continue with the QRMP? So every month I have to opt in? No, the answer is no. By default, the previous option continues. If you want to change the option, then there is a facility to change, shift over between options, between quarterly and monthly for every quarter. Now, I am doing a new registration. Will I get this QRMP scheme? Absolutely yes, because your turnover for previous year would be nil, or I'm presuming like that, and even in the current year, since it's a new registration, you can definitely go in for this QRMP scheme. I was earlier in composition scheme. Now I have come out of the composition scheme and I want to come to the regular scheme. Can I again opt in for this QRMP scheme? Answer is yes, that would be enabled. And I already discussed this point. This option for QRMP scheme, once the aggregate criteria of 5 CR is fulfilled, then for each GST, it is my choice. I can go all QRMP, few QRMP, all monthly. That is my choice. Not possible. As I said, for the quarter for which I'm opting in. So here I've taken an example of Jan to March quarter. If I want to opt in or opt out after 31st January, it won't be possible. Again, previous due 3B should have been filed. So I've taken another example of opt out here. For April to June quarter, I decide to opt out on 4th May. Earlier I had opted for QRMP scheme. Can I opt out? Answer is no. Within 30th of April, you should have opted out if you do not continue. Just have to mind these timelines if we want to opt in or opt out. Now the question comes. Fine, I will file monthly GSTR1, I will file quarterly GSTR1, quarterly 3B and all that. Already there is an issue with my recipients or the person who say that you are a quarterly filer of GSTR1. I am not getting the reflections in my GSTR 2B, 2A, whatever it is. So I am not able to take. So facilitate this option, they have provided something called as invoice furnishing facility. Now what is this invoice furnishing facility? This facility, it is again optional facility. I repeat, it's an optional facility. You can upload only B2B transactions from 1st to 13th of the succeeding month. I'll take an example. January month, sales is, let's say, 50 lakhs. Okay. Out of that, there is 5 lakhs worth of B2B invoices. All others is B2C. I only want to upload those B2B transactions so that the corresponding party will get the out of it. There is something called as invoice furnishing facility which will be enabled. This will be available from 1st of February till 13th of February. After that, this facility won't be available. So between that period, if I upload those B2B invoices, then the credit reflection in 2B. So, but there is an upper cap to this invoice furnishing facility, that is up to 50 lakhs of the value of outward supplies for the first and second month. Of course, for the third month, we will use the GSTR1 itself and upload the details. Again, since it is an optional facility, if we do not use this facility, all transactions, all B2B transactions, we can upload in quarterly GSTR1 itself. No restriction on that. But again, the point we should note is, once we upload in IFF, again, we should not upload same transactions in GSTR1. It will be repeat otherwise. So, duplication of transactions will happen. So, GSTR1 quarterly should exclude the transactions which is already furnished in IFF. So, again, continuous upload facility will also be available, meaning thereby I have only few transactions. As and when transactions happen on the same day, I want to upload it. You're welcome to do it continuously. It can be uploaded from 1st of the let's say for the January month, from 1st itself, IFF would be enabled and it will close on 13th of the February. So then automatically this data will flow to GSTR1 quarterly written as well. So we should not upload it again. I'm sure system validations would be there and error might crop up. I was talking about making payment of taxes on a monthly basis. There are two methods which I already discussed. One is a fixed sum method, another one is a self-assessment method. In fixed sum method, they're also trying to automate the entire process, probably to avoid the human errors. A pre-filled challan facility in PMT 06 will be made available. Because it is based on historic information, so last quarter or last month, whatever cash portion I paid, or that will be taken up here, and out of that 35% will be automatically filled in the PMT 06 challan, and using that challan I can deposit my taxes. In the self-assessment method, one has to manually compute and based on the outward supplies RCM liability minus the eligible credit, and cash is already available in the electronic cash ledger, then only balance deposit would suffice. So let's say there is a transaction where we have this government transactions where TDS government would have deducted, been filed under GSTR 7. Similarly, I'm doing transactions through e-commerce operator. He has done TCS that has flown through TCS GSTR 8 returns, and it has come to my electronic cash ledger. Already there is balance in my electronic cash ledger. Can I consider that and deposit balance taxes only? Yes, the answer is yes. You can consider whatever balance is available in the cash ledger, and only balance can be deposited. So I've just given the legal reference. We will look through the legal provisions also in a while. This is an example of how the fixed sum method works. So let us presume that for January, this is provided in Circular 143 for that matter. So Circular 143 gives this example where cash paid in Jan to March under these heads is so much. So it will take an exact 35% of under the respect, and a pre-filled challan will be created, and we can just deposit based on that. So here the previous option is quarterly, but what if the previous option is monthly? So for Jan to March, I did not get into the QRMP scheme because maybe I wanted to understand it much better, whatever. So I opted for monthly. But in April, I want to try for this QRMP scheme and I want to go for fixed sum method. So March, I paid so much. So the pre-filled challan will contain the details because system will know previously what option you chose. Based on that, the challan would be created. The self-assessment method. This is the regular 3B computations what we do. Probably we can take a broad picture from the client, what was the sales, and I understand practically self-assessment method, it is almost like doing all the work and only not filing the return. But maybe on a broad level, if we want to understand and complete details are not available, maybe client will inform us how much cash outgo might be there. On a probable basis, along with the RCM details, we can compute, make use of the eligible ITC, whatever is there, offset, and then determine how much cash to be deposited. This is a self-assessment method where we should do it on a monthly basis. Now switching between the payment methods. So what is this now? So we heard QRMP scheme switching between monthly and quarterly. Now there is something called as switching between payment methods as well. What is this? So can I say for the first month I will go for fixed sum. Second month, no business at all. So it's a nil transactions or no liabilities coming up. So I don't want to pay anything. Can I do that? That is also absolutely fine. Or another cases, I am sure that there is no so much 35% of the portion of tax is not there. So second month I want to go for self-assessment and pay the reduced taxes. That is also absolutely fine. In fact, para 6.2 of the circular gives reference to this. I couldn't trace this into the rules or the various notes. But para 6.2 provides a kind of a clarification which says that either of the two options, two tax payments method may be used in any of the 2 months. So month 1 I'll go for self-assessment, month 2 I'll go for the pre-filled challan, possible. Month 1 I'll go for fixed sum, second month I go for self-assessment, possible. I can switch between the methods. What is the timeline for deposit of taxes? So since 3B is going to be paid on a quarterly basis, when should I deposit these taxes? So there is an time gap for that matter. The regular return timing is 20th for monthly filers. So they have provided time till 25th of the succeeding month to deposit the tax amount. The PMT 06 challan, the regular challan what we use for depositing the taxes, same challan we will use and deposit. However, one precaution what we need to take is probably from 1st of January if we try and see, or from 1st of February, this option would be enabled where under the PMT 06 challan, there will be a drop down called monthly payment for quarterly taxpayer, and that must be selected while depositing the taxes. Probably a system check so that we should not use that for any other purpose. So this is a little critical, and the due date is, the timeline for deposit is 25th of the succeeding month. And the rule also provides that there is no requirement to deposit taxes in case of nil tax liability. Like April, we know there was a shutdown and there was no business at all. There could be possibilities where in a particular month there are no tax liability arising at all. In such a case, deposit of taxes is not required. And how do we compute this balance to be deposited? One is the electronic cash ledger and credit balance ledger is sufficient. So that we have to see, and of course RCM we need to discharge in cash. And second month we'll have to check cumulatively. So as I already discussed, if there are any TDS, TCS deposits flowing into the cash ledger, that can also be considered. Now what is the restrictions in this regard? This deposit cannot be used by the taxpayer for any other purpose till the filing of the return for the quarter. So this is an important aspect. Let us say in the month of February there was an interception of the vehicle, and they've determined whatever MOV 07 and all that they've issued, and they've issued a DRC 03 and they've issued an order or a demand notice to make some payment of the taxes. Since I've already have some balance in this electronic cash ledger, can I use this for that? The answer is absolutely no. That is the very reason they've inserted this control check where the PMT 06 challan will have a drop down as monthly payment for quarterly taxpayer, so that this amount cannot be utilized for any other purpose till the filing of the return. So after the return is filed for the quarter, there is some excess cash balance that I am free to utilize for other purposes. But till I file the return for the quarter, this becomes kind of an earmark thing, and I am not supposed to use this for any other purpose. Now the question, what is the due date for quarterly 3B? So, of course, as we are aware that the PMT 06 for first 2 months is 25th of the succeeding month. But for 3B, the due date is 22nd for category 1 states and 24th for category 2 states. In fact, all these times we have been receiving notifications to check the due dates of the 3B and 1. That from 1st January 2021, certain rules have got amended where they've incorporated even the due dates in the rules itself. So probably we won't be required to wait for the notifications for the due dates. Now, data for quarterly return. What will be the data? Of course, outward supplies and related taxes, tax under RCM, eligible ITC. We do the monthly compliance. The period will be quarterly. Of course, deposit the balance tax as required, offset the liability, and file the return. One important aspect I want to discuss here. Let us say for the first month, I was supposed to discharge in cash. The second month, I have excessive credits. When we compile the 3B, I get the entire credit together, entire liability together. This is that we tend to use that future credit to the past liability. I also want to draw attention of the members to the first to section 39(7), which was inserted Wide Finance Act, Wide Section 97 of the Finance Act 2019. That amendment was required to facilitate monthly payments for the quarterly filers. That was notified Wide 81/2020 from 10th of November 2020, that notification, where this effect of facilitating monthly payment for quarterly filers was enabled. If I am going in for fixed payment, fixed sum method, system will compute. I can just pay that and be fine with it. But if I have opted for self-assessment method, mind you, The first month liability, whatever I'm supposed to discharge in cash, I have to discharge in cash and carry forward this electronic credit balance as if we had filed monthly returns, whatever would have been the effect, same thing has to be taken care in GSTR 3B, because the self-assessment, the words used in first proviso to section 39(7) is in a month. Had it been in a quarter, we could have used all that, done all that. Since the words used is in a month, so we are obligated not to use the future credits for the past liability. So that was one of the caution which I want this point. For fixed sum method, or by mistake I deposited excess tax, probably my calculations went wrong because I didn't do a meticulous calculation, whatsoever reason, I have deposited excess cash into the electronic cash ledger using this PMT06, whatever the drop down facilitated by them. Now what is the option available to me? I have to wait to claim the refund till the filing of GSTR 3B of the quarter. Till then I can't get the refund out of it. So that would be permitted only after the quarterly 3B is filed. Let us say my registration got cancelled in first or second month. Should I file my quarterly return for the entire 3 months? Yes, absolutely necessary, because there would have been transactions, or even no transactions, the date of cancellation would have been would have been in this particular quarter. Now, alternatively, if I do not want to wait for all the quarter to get over and then file the quarterly return, I may opt out within, as I know, within last day of the first month of this quarter, and then furnish the respective monthly returns and do the cancellation. Complete the cancellation process, because GST will be filed the final return in case of cancellation. So if I have continued for the quarterly scheme, I should file the quarterly return, else I can. Implications on GSTR 3B. So I'm aware, present whatever data has been filed with respect to the invoices, GSTR 1 would reflect those GSTR 2B would reflect those transactions. So 11th being the due date for monthly filers, whatever has been filed between 12th of the previous month till the current month, it is coming in GSTR 2B, which is a static document. It will never change. 2B is 2B forever, but 2A we have seen every moment you download 2A, there will be a new figure. That is a very dynamic document. So, what happens because of this quarterly, returns monthly payment scheme, if that invoice burning and your invoices are uploaded B2B. When I say invoices, it can be even debit notes and credit notes. The transactions pertaining to B2B, if you have uploaded using the IFF, then certainly that will get reflected in counterparty 2B. Now, one important change is the rules has been amended where 2B to get generated after 13th of the subsequent month after the introduction of this QRMP scheme. Reason being, I am permitted to use IFF facility till 13th. So whatever comes in, whatever gets reported through IFF or the GSTR 1, of course, the due date for GSTR 1 is still 11 monthly. I'm talking about the monthly return, and more the quarterly GSTR 1 due date to 13th of the month following the quarter. So quarterly filers uniformly 13, 13, 13. That is the date within which they have to furnish. If they do not want to make use of IFF, absolutely fine. All the data for the entire quarter, they can file it through GSTR 1 within 13th, which is the due date. So because of this QRMP scheme, we can use this IFF and enable the counterparty to. Now, what are the interest and late fee implications? I'm first taking you through the fixed sum method. Interest implications on fixed sum method. Since the government has allowed me to go in for a fixed sum method where based on the previous trend, a pre-filled challan is generated and I am paying that tax. But at the end of the quarter, when I evaluate, I figured it out that I should have actually paid higher taxes. Do I need to pay interest on that differential? The answer is no, because you have opted for this fixed sum method. Let us say the 25th I was supposed to deposit the amount, but I deposited later after 1 week. So for this differential period, that is from 26 till the date of deposit, yes, definitely interest is applicable. For late deposit of taxes, again for late filing of quarterly return, the due date for quarterly return we know 22nd for category 1 states and 24th for category 2 states. If I file those returns lately, again on the cash portion of it, because section 50 subsection 1 got amended and got notified also. So henceforth, certainly it is going to be the interest on the cash portion for sure. Of course, the amendment was supposed to be prospective, retrospective, based on the assurances given during the I think 39th council meeting. There was some instructions which was provided. Rest the cases which have already been taken up due to some technical and technical reasons they've done that. Anyways, that is not the topic for discussion. So henceforth, it is sure that only on the cash portion of it we would be paying the interest, and the rate of interest going by section 50 subsection 1 would be 18% per annum. What is the interest implications if I go for self-assessment method? Unlike fixed sum method, where system will determine based on the pre-filled challan, but in self-assessment method, the onus and obligation is on the registered person. I had to determine the taxes, but I have determined that less taxes were out, that higher tax was required. Certainly interest will apply on the differential part under the self-assessment method. Again, the late filing and late deposit of taxes, same what we discussed for the fixed sum method will equally apply mutatis mutandis assessment method as well. I've just taken option, an example where previous option was quarterly. So here, although we see that we have deposited lesser tax, 35 was deposited, actual is 50, but there is no interest because I've gone for fixed sum method. And I have paid, in this example, I'm presuming that I've paid within 25th. Assessment method. So in this, instance, interest is applicable because I myself have determined, but later on I have realized that I have less paid the money. So interest is applicable. Again, late filing of return, interest is applicable. In this case, it was filed after 1 week. That is applicable. How do I discharge the interest? Interest discharge will happen through quarterly 3B. Again, we know that any other sums needs to be discharged through electronic cash ledger only, by depositing into electronic cash ledger only. So that being the case, so interest will have to be discharged quarterly basis. Now, what happens to the late fee? Firstly, if I delay the payment of taxes for the first month using PMT 06, the good news is no late fee. The late fee is only for the return, because section 47, which talks about this late fee, refers to the return under section 39(1) or under section 39 to that matter, and we are concerned about 39(1), which is the regular returns, 3B for that matter. So that being the case, the mere payment of taxes is delayed, there cannot be late fee over there. Now, by understanding this scheme, a question arises: for whom is this scheme suitable? In my analysis, I've tried to bring in probably these are the cases where definitely this scheme can be of certainly reduced compliance burden. One is a business which is high intense, which is stock intensive. Most of the times they have having ITC carry forward. Many of the distribution businesses, they will be having pressure from their main distributors or the manufacturers, where they dump in the stock by the month end to complete their targets, and these people buy those stocks. And so most of the times, if we have a closing stock high intensive closing stock, and there is always a ITC carry forward with very less outgo of cash, and the overall, of course, the eligibility has to be checked. If yes, then certainly this scheme is beneficial because monthly they can compile the information and file the returns with respect to tax payments part. Similarly, when there are predominantly B2C transactions, so again there is no requirement to use the IFF, or can go for quarterly GSTR one, and I know we can just discharge, pay the taxes on a monthly basis. Again, having exempt or nil rated transactions and one-off nature of this taxable transactions, I think this scheme is really useful for them. And cases where no much ITC to reconcile, there's hardly any input tax credits. If we look at our own profession, on a regular basis, we might not have got any great ITC. Unless we make some laptop purchase or whatsoever. By and large, where no much ITC is there to reconcile, I only know that so much is the transactions, I make the payment and probably go in for the QRMP scheme. Another business for which this scheme is suitable is across the months, it is an average business of, let's say, 40 lakhs each. We have seen this, trend all through. Something like that. So if there is a business with a uniform trend, this method could be used. Further, they may decide about this fixed sum method. Again, when fixed sum method is used, we also should be careful about the transaction types. I am predominantly having interstate transaction only, hardly any intrastate, or vice versa. Because the previous trend, based on that, if I have an interstate transaction, the CGST, SGST would be computed and less of IGST would be there. But if in this quarter, if there is a shift, more of interstate and less of intrastate, we need to work out on all those things and then decide whether fixed sum is better or the self-assessment method. Businesses where only few months they have this high volume transactions, it is better to go for self-assessment method. And small export businesses where it could be export of services where no much ITC is there, and or even those small businesses where they're okay to get the quarterly refund, because once we file 3B also quarterly, then refund claims can also be processed only after the quarterly return filing. So we need to keep these factors in mind and determine for which of our clients QRMP scheme might be beneficial. Of course, if we analyze and remove those cases for QRMP, monthly compliance's burden would certainly reduce. Now, what are the benefits? Firstly, late fee implications. I'm sure each of our fellow professional would have seen this, at least in case of couple of clients where they have paid heavy late fee by delayed filing of returns, while the taxes were not at all incommensurate with the late fee what they have discharged. Many a times they've ended paying fees when hardly any tax payment was there. So in case of such clients, the late fee repercussion is going to reduce by 2/3, meaning thereby late fee will be only for 4 GSTR 3Bs in a year, which was earlier 12 GSTR 3Bs. So this is going to be a benefit for those non-compliers or delayed compliers, we may say so. Again, earlier quarterly filers, a couple of invoices if you want to upload, then reconcile data for all other tables. I think this is a good option where we can use this. But again, it will have a challenge of whatever has come in IFF that has to be removed while quarterly GSTR 1. So one way it is beneficial, another way it adds to our reconciliation. And there is also scope for working capital planning and management, because I discussed that there is possibility to shift between fixed sum method and self-assessment method every month as well. So maybe this month my business is more, I know that more taxes is going to come, but I will opt for fixed sum method based on previous month in order to reduce my in order to working capital effectively. Of course, there's nothing wrong in doing that. So definitely we can think from the idea of working on the working out for the management of working capital. Certainly that is possible. But again, how much time we would dedicate to all this is a question we need to put in. Is it worth all that effort? Probably in some of the cases it might be beneficial. A couple of precautions I would like to share here. I already shared this because of that, first proviso to section 39(7), which uses the word in a month. Our obligation has to be month-wise computed, consolidated into the 3B. So we should be sure about not using subsequent credits to the prior period liabilities. And while making payment under PMT06, ensure you use the drop down. Otherwise, system might track it to some other payment and interest might come in. I'm not sure if the system is going to compute the interest automatically. Probably in days to come, that would also be the objective and agenda. They might even introduce that as well. Now also evaluate which is the suitable method. Because if by self-assessment method you are and fix its score, or you have paid excess taxes, then again refund and also will pay. So before choosing the option, because if we pay excess, it will be there in the cash ledger. We can't claim even filing of the GSTR 3B returns for that quarter. So there's a time involved here. So we need to compute, we need to evaluate all of these factors, deciding on which option is suitable. Now, I wanted to take up, starting with the section rules and all of that stuff. So I actually thought, let us run through the entire process and procedure of how the scheme works, and then touch upon the legal provisions for a change. So, in fact, these are the various notifications and circulars which have been issued to facilitate this implementation of this QRMP scheme. The first one, as I already stated, a lot of amendments were brought in, Finance Act 2019, especially Section 97 of that Act, where the return furnishing mechanism under the Section 13(9), which talks about various returns, monthly, quarterly, all that. Three major amendments. Of course, for this scheme, what is relevant is subsection 1 and subsection 7. So that is where the even the provision for quarterly filing of 3B itself was brought in using this subsection 1, and that was not yet notified. In fact, although it was act was passed, but the corresponding provision was not yet notified. This notification 81/2020, all of these are issued on 10th November 2020. So all of that, they've specified. I've also included in my slides as to when which provision got notified. So this got notified with effect from 10th of November 2020. And there is a plethora of amendments right from Rule 59 to the introduction of Rule 61A, where this quarterly scheme could be opted. That is covered in notification 82/2020. And we've seen various notifications where every now and then we get the due dates notification. Now, in fact, 83/2020 has provided that for this from October, for January to, for the October to March, monthly filers will have 11th as the due date. Quarter, which was earlier, end of the month succeeding to the quarter. Like for October to December, 31st January was the previous GSTR 1 quarterly due date. Now they've preponed it to 13th. Similarly, for Jan to March, they preponed it to 13th of April. We need to mind this for quarterly compliances. And notification 8 talks about the class of persons who are eligible to opt for this QRMP scheme. We have discussed all this, although on a broad basis, on an understanding perspective, from the conceptual perspective, I've categorically pulled up the various provisions into the respective buckets to enable us get a perspective about the scheme. So, which class of persons are eligible, that was provided in 84/2020. Now, we discussed about this fixed sum method of this, the pre-filled challan, all that. That special procedure is contained in this 85/2020. And there is one notification which rescinds the previous notification to give effect to the 3B due dates. Now, they've incorporated the 3B due dates also in the rules itself. And since the notifications are a little complex to understand, of course we professionals are quite good in doing all this, but from a layman's perspective or from an easy understanding perspective, they always issue for a summation of the entire thing. So there is the circular 143, which contains the segmented information about this entire scheme of how it works. Now, these are the amendments to the section I was talking about. So one is they have, provided for the quarterly filing of 3B itself by inserting this first proviso to section 39. And with respect to discharge of taxes, two provisos are there. In fact, what is relevant to us is the first proviso, where I already discussed the repercussions of, making the payment on a self-assessment basis. Now, coming to this rule, kindly note that this rule 59, which talks about furnishing of details of outward supplies, this is effective from 1st January 2021. Okay, so this is the substitution of the rule, which is going to be coming to effect from 1st January 2021. In fact, they talk about invoice furnishing facility in this rule, and they also talk about exclusion of data provided through IFF from GSTR 1. And it also states that the B2B the transactions with respect to IFF includes B2B invoices, credit notes, as well as debit notes. So these are the major changes. And one important change, as I said, the IFF would be from 1st to 13th of the next month. And one more important change which comes in again with effect from 1st January 2021 is Rule 60. Earlier, this Rule 60 spoke about GSTR 2, that is furnishing of details pertaining to inward supplies. If you look at, I have highlighted, now the header of the rule is change, form and manner of ascertaining details of inward supplies. So, Rule 60 will have a impact on ascertainment of details of inward supply. So, if we carefully examine, GSTR 2 would be removed with effect from 1st January 2021, but rather they have introduced rule GSTR 2B into the rule. Now we were wondering, in July 2020, this year July, they enabled GSTR 2B in the system. We were wondering from which provision did it emanate, what is the basis for this, all that, and probably we thought Rule 36(4) to implement that, for the matching process and freezing of the data to a particular point. Otherwise, dynamic 2A was quite a challenge. Probably they brought this, but now they have authentication by notifying Form 2B, and also they have made it part of Rule 60, which states that ascertaining the details of inward supplies. In fact, 2A, GSTR 2A will also be there. And also there will be a 2B. So there will be two things, 2A and 2B. So 2A would be dynamic, while 2B would be static. It will fetch data from various sources. In fact, GSTR 1 and IFF data, it will reflect in GSTR 2A Part A, and NRTP, that is non-resident taxable person, that data from GSTR 5 will go to again Part A. Then input service distributor, that will go to Part B. TCS will go to Part C in 2A. Apart from that, import of goods from overseas as well as from SEZ, that will also get reflected in Part D. We are already seeing in 2B that the import transactions which is which is tracked through the ICE gate, that is coming including the SEZ transactions. So this is the important aspect. Sub-rule 7 of Rule 6. It states that GSTR 2B to contain ITC details based on GSTR's ones filed between due date of the previous month till the current month due date. This is what I was talking about. And again it states within, to my mind, after reading all this rule, as I already stated in the previous slide, we need to start doing the 2B reconciliation from 14th onwards, because from 14th 2B will be enabled. So this is what it says. That is how I have arrived that after due date of IFF is 13, so 14th onwards we will get the 2B reflections. Coming to this, Rule 61. Now, this Rule 61 is about form and manner of furnishing the returns. So that is in the entire 3B, all that was there. So there are two amendments to Rule 61. One is an amendment from 10th November to 31st December. This amendment will be effective. And from 1st of January, there is a new rule which will substitute this entire Rule 61. Okay, why is this interim rule insertion is necessary? Because the 39 section 39 amendment which got notified from 10th removed the words before 20th from the act. So they had to put it in the rule. So they have put it in the rule to facilitate due dates specification in the rule itself. Of course, category 1, category 2 states also they have specified the due dates in the rule itself. Now let us see what is the change that is going to happen in Rule 61 from 1st of January 2021. Monthly filers, they should furnish 3B within 20th of the next month. Quarterly filers, I discussed 22nd in category 1 states and 24th in category 2 states. And they should discharge the tax and file the 3B. And for the first 2 months, they will deposit to PMT 06. This we have discussed. Commissioner also can extend the due date. That provision is enabled in the rule itself. And using any balance in the e-cash ledger, the PMT 06 can be utilized. And then it will be used to offset and refund claim only after filing quarterly 3B. All these discussions, what we discussed till now about the scheme, all those are incorporated in Rule 61. And one important change, as you can see, GSTR 3 has been removed. So with effect from 1st January 2021, there would be neither GSTR 2 nor GSTR 3 in Rule 60 and Rule 61. And there is an insertion of 61A. This has the effect of insertion from 10th of November itself, because if somebody wants to opt in from tomorrow onwards, they can start opting in. That is why they have provided this rule where a QRMP scheme opting in, opting out has been specified. Now, GSTR 2B form has been notified. We have seen practically on the portal. It also gives an indication of which table of GSTR 3B it will comprise in. We have seen, in fact, auto drafted 3B has come. Before filing, we can download the PDF which contains data flown from GSTR 1 in case of monthly, and data coming from 2B within whatever presently the 11th is the cutoff. That is going to automatically getting incorporated in the system generated 3B. So these are all the indicative figures. Now assessments, they will have a stronger, kind of a support and proof. Of course, there is a, there is a transition which would be there, because there could be some credits of earlier period which all those things would be there, leading to a difference between my claim and what is reflecting in 2B. But this is by and large the form of 2B. It's almost like the 2, but the cutoff period is now it would be like for the monthly filers it is the 11th, and the quarterly filers it is the 13th using the IFF facility. Now what is this GSTR 2B? Quickly I want to summarize this, and it's a static statement. It will as we discussed, it will flow from multiple places, and it is based on invoices furnished between last month 14th to current month 13th. Again it will differ based on the monthly filers. And what the advisory says is one has to avail ITC based on 2B. Of course, it's quite a debatable matter. How can a rule take out a right which the taxpayer has? I have the document, I have paid the taxes to my supplier, I fulfilled all the conditions put up in section 16, but for some reason it is not coming in 2B. Am I restrict my credits to 2B itself? So it's a matter of call which we as professionals need to take. For certain clients, litigation could not be a possibility, or they might not be willing, rather they might be willing to introduce some additional working capital in the couple of months, and later on, as and when 2B gets, reflections happen in 2B, they might want to use it on a later point in time. But some might be aggressive. They are not ready to shell even a single rupee of working capital. They want to claim the entire credits as per the legitimately whatever as per the books of accounts. They don't want to reconcile with 2B. That's their choice, and accordingly we may take call. Of course, there are a lot of possibilities and grounds based on which we can say that the reflection is in 2B is not a quintessential factor to claim the ITC. There are both the perspectives which is possible. So that being the case, it's on a case-to-case basis. As professionals, we may need to take a call. Of course, making aware to the respective clients on the implications of this. Now, there is also something in 2B which indicates as in ITC which is not available. Now, system computes certain ineligible ITC based on certain criteria. One is this 16(4) limitation. Let's say somebody of filed GSTR 1 of 1920. Also come in my 2B, but in 2B it will sit as not available because for a 1920 credit I need to avail within the due date for the September return. See, there could be a possibility that I have availed based on some confirmation letter received by them, or on some basis I've availed the credit. So that doesn't mean, but system is now capable of identifying. If we look at the new feature in annual return, table 8A, system is also giving the details of what is eligible ITC, what is not eligible, all that indicative factors it is giving. So likewise, they've nailed it down even to the monthly level. And again, in case where, I obtain hotel services by going to an outside state, the LOS, the POS is not is equal to LOR. That is, place of supply is not equal to location of the recipient. I have a Karnataka GST and I go stay in a Chennai hotel and I get a CGST, SGST of that state. So that is not eligible. System will identify that and make it as not available. And they in the advisory they have given that it is not just limited to what the system identifies. I might have a block credit. I might have purchased a car. System will not identify it as an ineligible credit because for me it is an ineligible credit. For a car dealer it is an eligible credit. Similarly, for a person engaged in moving of goods, then such vehicle credits could be eligible. So to reverse the ineligible credit is my obligation. Merely system has indicated it is not a finality. It is only indicative. So I need to self-assess and reverse. And as I said, import of goods and related information would also be available. But import of services, again, it has to compute manually. One has to ensure none of the credits is taken twice, and ITC reversal has to be made on a self-assessment basis. Now, again, there are two options. One, we get an online, we can view it there, or we can even download it over there. Now, certain important factors to be considered, these are the instructions which have been provided. So, negative credit owing to amendment must be reversed. Earlier, I had claimed 100 as credit. Now the supplier has amended it and made it 90, when actually it was 90. So that 10 I need to reverse by putting in 4B2. But if I have availed right credit, let's say 90 only I had availed, then no need to reverse. RCM credits are available subject to payments. Of course, whatever is RCM which is indicated goods, again, courier imports would not be traced here. Only the ice gate related imports is available. Let us say there is a credit note and owing to amendment, we can reclaim it. There was a credit note of 100. I reversed this 100 rupees as credit note, but later the supplier amended it to 80. So this 20 which I reversed excess, I can re-avail it by putting it in the respective place in 3B. And again, this ITC not available is only for information, and technically it should not be availed is what the instruction. So is what the instruction says. So a couple of more discussions and then we can head towards the question and answer. So again, the first myth which we need to keep it away is, although return filing is quarterly, payment is obviously monthly. And again, this aggregate turnover is not GST invoice, but it is PAN-based multi-GST consolidation. And it is not required that once there is this within INR 5 crore eligibility, for each GSTs I can choose between QRMP or monthly. And we also discussed there definitely is interest implication owing to the late payment of taxes. Certainly will attract, of course, with respect to self-assessment method. If I have computed wrongly and there is an excess tax outgo required, then certainly interest. Now, this is one important aspect. All through we have got used to it that if it is our turnover is up to 5 crore, we either file it within 22nd. In Karnataka it is 22nd. In other cases where category 2 states it is 24th. But let us take an example. My turnover is 3 crores. I did not go for QRMP scheme, but I opted for monthly scheme. Now the due date for all monthly filers irrespective of the turnover is 20th only. So I need to ensure that I file, once I become a monthly filer, my due date is 20th only. So only for the quarterly filers, the 22nd or 24th option is provided. Now action points, as I said, one is if you want the auto migration, I'm sure 30th will decide. You please check the system has determined is that option okay for you. If you are not okay with it, you can change it. If you earlier you were you had opted for monthly GSTR one, even though your returns were 1.5 crore, even though your turnover was up to 1.5 crore, but now you want to get into QRMP scheme, system will automatically choose you as a monthly filer. But if you want to change, you can very well change it. From tomorrow it will be enabled. Up to 31st, you can opt in for the QRMP scheme. Similarly, yours was a 3 crore turnover and system has automatically taken you as QRMP scheme and you don't want to get into that, you can even opt out from that scheme. So couple of points to ponder before I take up your questions. I have certain questions to put before you. Some of the answers we may discuss and some probably we have to wait and watch till the system gets enabled. Let's say, the system permits, the law permits me to include the turnover and the transactions of preceding financial year and discharge the same up to September of the following year. So 1920, owing to that fact, I have included even 18-19 turnover, because of which my turnover has exceeded 5 crore. But actually my turnover is below 5 crore. Now will the system allow me to enter into this scheme? Probably there will be a system validation, because in the circular also I have read that the computation of the aggregate turnover will be based on, the system computation will be based on the 3B's file. The question, we'll have to see how it works. And I was talking about the 50 lakhs limit with respect to invoice furnishing facility. So mine is a seasonal business. So in a particular month I have more. So I have to limit my upload only to 50 lakhs. And the question is whether this 50 lakhs refer to taxable value or invoice value. So the wording used is value of outward supply. To my mind, it appears it's taxable value. But yes, once the portal gets enabled, we'll have to test, try all those things, then we will come to know. And again, a question comes, let's say my turnover is 40 lakhs and my debit notes is 20, I mean the invoices value is 40 lakhs, the debit notes is 20 lakhs, so it became 60, and my credit note is 10 lakhs, so it came 50 lakhs. Will the system treat it as 80 lakh worth of transactions or net of, so will I be allowed to upload? All these are questions only time can tell us once the facility is provided. Another important question, whether Jan month invoice can be uploaded in 1st March using IFF. So this is not possible. It is even stated in the circular as well as in the provisions, in the rules it has been mentioned. The IFF would be available only from 1st to 13th of the following month, of course apart from the continuous upload facility, meaning thereby Jan month invoice I can upload in IFF only by 13th of February. After that I can't. On 1st March I can do February invoices but not Jan. I mean, as per the provisions which I've read through, it appears like that, but let's see how the portal allows. And there is another important question which I have. Let's say based on the fixed sum method, my earlier transactions were more of interstate and less of intrastate. So based on that, the fixed sum method has computed and taken the amounts. I mean, I've filled the challan and made the payment. But now in this current quarter or current month, the composition of business has changed. That is, I have more of intrastate transaction rather than interstate. Now, can I shift between IGST to CGST, SGST using PMT09 at the time of quarterly filing of returns? I would say instead of risking this, it is better to go for self-assessment method where there is difference in the value, in the composition of the business. See, yours is always a intrastate transaction, no problem. You can go for fixed sum, that will happen. But there is a mix of both, and there is always a difference between this and that. So it is better to go in for a self-assessment rather than waiting in anticipation to see whether this PMT09 can be used or not. And another question is whether system will compute the interest. Probably this also we'll have to wait and see and how it works out. And this question I've dealt in length, whether ITC available in or used to offset the liability of first month because we are filing a quarterly return. The answer is no. There is an onus on the do a self-assessment based on a month-wise transactions. Now, I want to conclude, this presentation before I take up the questions, that the entire scheme or the entire things, the way things are changing and moving is towards integrating 1, 3B, 2B and all that, the data in various forms are kind of getting the integration here. So, in fact, this auto-generated 3B, if we feel, it gets data from 1 as well as 2B. These are indicative figures. Of course, any adjustments are possible because there could be some other transactions which are missed out. We want to make any changes, all that. It permits. Presently, it is available for monthly. Once this QRMP scheme is going to be implemented, I'm sure this auto-generated 3B will come even for the quarterly filers. And any negative values in 1, that is, I have more of credit notes this time than I have more of sales returns than the sales. So GSTR 1 will have a negative figure, but 3B there is no scope for reporting negative figures. I only need to forward to the next period and make the adjustment. So that is possible. And I'd be glad to take up any questions in case we have some questions. So do we have questions?
Yes, ma'am. In Q&A session, it is there. You can just go through.
Yeah, just a moment. So assume 3B is filed before 30th 11. If auto migration happens on its own without our intervention, then how can one be able to exercise the option to opt in? Sir, once it is already opted in, then there is no requirement to again the system itself has opted you in and you are into the QRMP scheme. Only if you want to opt out, you have to manually opt out from it. Yes, so option is already been exercised on our behalf. That is true, sir. System has done it on your behalf. Whether payment of tax on monthly basis is optional for quarterly GSTR 3B filers? No, the payment is compulsory in a monthly basis. The only thing is, if on a self-assessment basis there is no cash outgo, you need not pay. Suppose if you still wait for the quarter and pay the taxes at that point in time, certainly interest will attract on the cash portion for every month. Okay, so please explain more on the difference between 2A and 2B. Sir, GSTR 2A and 2B, now after the amendment of the Rule 60, it contains almost the same data. The basic difference is 2B is static document, it will not change. 2A is a dynamic document in the sense, like I'll give you an example so that we can understand this better. Let us say the June 2020 GSTR 1, your supplier has filed in December 1st of December. So it will get reflected in month 2B, what gets generated for you. But in 2A, you have to go back to June 2A to see, because he has filed a June return now. So that is the point. 2B is generated based on time period of your filing by your multiple suppliers. 2A is based on the return period. Suppose a transaction of GSTR1, then it will be part of your November 2A as well as November 2B. But if the return itself is filed late, June return being filed in December, it will be part of 2B of November month, whatever it comes for us. And then In 2A, it will be of June 2A only. So that is the basic difference. 2B is a static. After 13, no changes. It is over. Same document forever. 2A keeps on changing as and when your supplier keeps on adding the, filing the GSTR and returns. Rule 36(4) as per 2A will be considered or as per 2B. Sir, what does Rule 36(4) say? The Rule 36(4) says that as per your supplier, as per the return furnished within the due date of specified under section 37. Now, what is the due date of section 37? For monthly filers, it is 11. For quarterly filers, it is 13. So, whatever in this due dates it is filed, that is only will be reckoned for Rule 36(4), and that goes without saying that whatever comes in GSTR 2B needs to be considered for Rule 36(4) if we are following the Rule 36(4), because there are aggressive standpoints are also being taken. It all again depends on the call we have taken. Has anyone challenged the restriction imposed by Rule 36(4) to? Yes, sir. There has been, I think one before the Delhi High Court, another one, and I don't recollect very immediately. But yes, this provision has been challenged. What is your suggestion for keeping track of the ITC claimed as per Rule 36(4), 10% extra vis-a-vis ITC available as per book? Sir, as I am telling you, from a practical perspective, let me speak from my own cases how I have taken a call. In fact, we have since October 2019, this Rule 36(4) was implemented, but then till July, we did not have a yardstick to measure or to check which fellow filed the return, because I will be downloading 2A as and when possible. So till June, what stand we took was we would look at the GSTR 2A available, before the filing of the return, whatever is there for those who wanted a strict compliance of this Rule 36(4), we did that. But then we had the COVID period, then it permitted February to August a cumulative reconciliation. So since that pitched in, for till September, the same thing happened. All the adjustments, whatever was done through the September return and complied with. From October onwards, including September for that matter, for those who are insisting on the Rule 36(4) compliance, we are doing the Rule 36(4) compliance. The clients who are not willing to shell out the extra working capital, we are, telling them that there might be certainly chances of the notices being issued for the difference between the 2B and the 3B now. And that certainly can be answered. Those notices could be addressed on the merits, and we can put out the points, explaining why 2B reconciliation, credits claim as per the books of accounts should not be allowed. All those possibilities are there. So it depends on client to client basis. We need to, of course, keep them informed the possible repercussions so that they'll not get the shock or kind of unexpected thing if that is not done. So what is the impact of notification 86 part 2020? So I think 86 is a notification pertaining to the rescinding of the due dates. Let me just check on that. Just give me a second. Yeah. So sir, actually, as I said, the GSTR 3B due dates for quarterly, for up to turnover 5 crores was 24th or 22nd based on category 1 or category 2 states. Now, for Jan to March, as I said, they have amended Rule 61 and inserted the due dates also there. Why? Because the returns for quarterly filers, 3B also has become a quarterly return from January for some of the people who are opting for that. To give effect to that, they rescinded this 86 per 2020, which provided monthly due dates for October till March. So, with respect to GSTR 3B. To do away that inconsistency, they rescinded that and introduced this in the Rule 82 itself. Notification 82 itself. They inserted in Rule 61. Yeah. Can we avail provisional credit at 10% of ITC reported under 2A to B? Technically, it is 2B plus 10% if you're in compliance with the Rule 36.4. You can avail it certainly, but again, that needs to be reconciled. You need to carry forward it in a separate ledger to keep a track of it, and as and when that is received, that needs to be, re-reconciled and taken up so that nothing is taken twice. That needs to be ensured. In the self-assessment method of tax payment, where in a quarter there is no liability for the first 2 months and there is a liability only for the third month, which is paid after due date, what would be the monthly compliance whether interest taken from first month? The answer is no. The rule is also quite clear, where it says that when there is no liability, there is no need to deposit any taxes, irrespective of whichever method you follow, self-assessment, fixed sum. I mean, of course, you would go by self-assessment because once it is a fixed sum, you will take liability. The rule is clear. You need not deposit any taxes. The special procedure 84/2020, which 85/2020, which prescribes, that is very much clear that if in case of nil liability, no need to deposit tax, no interest. What exact impact will be there on integration of 1 and 3B? Certainly, sir, because there are so many, people who are taking disadvantage of this non-integration of 1 and 3B, where they're filing promptly the GSTR 1, the entire data, but 3B, they're either paying less taxes or, not paying taxes at all. And somebody else is claiming the credits, claiming refund of that. All those things are happening. We listen to so many of the things happening, such kind of things. So once these things are integrated, probably, we'll have to see to what level integration will happen. Probably in that case, 3B form should also get reform, because it should provide for last year data to be incorporated as the liability. All those changes, we'll have to wait and see how things are going to move. I think they're, moving, taking one step, step by step in this whole integration and digitization process. So any other questions, or did I answer, or did I leave any of the questions?
I think you have covered all the questions, ma'am.
Okay. Nothing on the chat box.
No, nothing.
No, I think there's one. GSTR 2B is introduced from July 2020. So that is actually GSTR 2B is made available on the portal from July 2020. Of course, probably to facilitate the compliance with Rule 36.4. But actually, as I said, in the rule, it got notified only from, it will get notified only from 1st of January 2021. Till then, there was no mention about this 2B. There's only an advisory which was given from the GSTN portal, nothing as an amendment in the rules and all. But certainly, with the introduction, with this amendment in rule itself, it got entry into the rules from 1st January 2021, effective from that date. So do we have any further questions?
Further questions, we'll just see, ma'am. So meanwhile, can you just quickly give a recap of this QRMP scheme for the benefit of all the audience?
Yeah, sure. So in short, this QRMP scheme is the quarterly return monthly payment scheme, where you can file your GSTR 3B and 1 quarterly basis. Of course, this is eligible as an option. It's an optional scheme. And to be eligible for this option, you have your turnover, that is the same PAN multi-GST in consolidation turnover. It should be within INR 5 crores, and both for the preceding financial year as well as the current financial year. And let's say in between, after opting in, your turnover exceeded, from the next quarter, you need to opt out from the scheme. So that is the whole preamble. Now, how do we make the monthly payments? there is a PMT06 challan. There will be a drop down called monthly payment for quarterly taxpayers. We use that drop down and deposit either of the two methods, fixed sum method or self-assessment method for the first and second month of the quarter. So the fixed sum method will have a pre-filled challan coming from the previous cash portion discharge for the previous quarter or the previous month, depending on your option what you opted for the previous period. So once that comes in, there will be no interest implication based on the pre-filled challan. Later on, while filing quarterly return, it is your liability gets increased. But with respect to this self-assessment method, you have to assess every month and pay the cash portion, including the RCM liability. And if there is a differential, certainly interest will come. And as far as late fee is concerned, only for GSTR 3B there is late fee, and if you late deposit the taxes, there is no late fee. So that is an implication from that. The scheme is effective from 1st January 2021, and you need to use this option. There is an auto migration which system does. If you do not want that, you need to opt out. Else, if you have not been opted by the system, you can manually opt in for the scheme. As I already stated, those having exempted transactions, B2C transactions, the export transactions without much refund implications, who have uniform business throughout, and they have high intensive stocks where usually it is credit carry forward. This scheme is really beneficial. One, that it will reduce the late fee repercussions for delayed filing as well. So IFF facility is there, because of which you can, B2B transactions can be uploaded. I think by and large, some of the people are definitely going to get benefit out of the QRMP scheme for reduced compliance is concerned, as far as reduced compliance is concerned. Of course, we need to evaluate on a case-to-case basis to see which of our clients will suit for this and which of the clients would be better off monthly. Yeah.
And finally, it is only just an option, so we can go ahead or not.
Correct. And again, I can shift between the scheme every quarter. For one quarter, I can choose quarterly, another quarter, I can choose monthly. So that is possible throughout the year. And even the payment methods, I can shift between every month. Like first month, I can go for fixed sum. Next month, I can go for the self-assessment. That is possible.
Okay. We have one more question, ma'am. You can just.
Yeah. Okay. Can you please read out the question, sir?
Yeah. So question from Alama Prabhu, sir. So please suggest what is the better method to keep track of ITC as per books and ITC claimed, and to follow up when the invoices are more, we are facing difficulty in keeping the track of practical difficulties of reconciliation process.
Certainly, I do agree. They're quite it's quite a challenging task, every month. So, but after 2B, probably will be, those of us who are following the 2B thing, at least 2B is a static document. We get to know what all we have claimed based on the 2B. And we have to use tools which help us in doing the 2A reconciliation. There are so many tools which are available, in the sense, we use GST Zen. And there are so many other tools. I'm not endorsing any product. I'm just sharing what we have been using. And even ClearTax has so many softwares, Webtel, Relo, and they have their own, ITC reconciliation, tools where large data can be kind of system can match us on a broad level. And wherever differences are there, we can spend some time manually reconciling it. Yes, it is all said and done. Still, this reconciliation is going to be a Herculean task, no doubt about it. But automating things can certainly, help us out in doing this. I'm also aware a lot of professionals have come up with small Excel tools and all to do this reconciliation. Probably we can, give a try to those to help us, so that majority system can take care. The only few left out, we can manually again check and see. One is having a broad reconciliation statement, and in fact, we being the professional, we've been doing a lot of compliances. We are sure to have been good at it. So, but it's a cumulative struggle which is there. That is no doubt. So probably whatever the invoices which are not claimed in the previous months, that has to be cumulatively accumulated in the workings, whatever we do on a monthly basis, so that whatever is taken, the credit that needs to be removed on a continuous basis, that can happen. And of course, in the books, we can have the deferred ITC ledgers to keep a track of what all is being deferred. That can be moved to the deferred ledger credits to keep track of it. So that on a large value basis, we will know how much of credits have been deferred and that has been claimed.
So I think only these many questions, ma'am.
Yeah.
So, and thank you so much, Annapurna Srikanth ma'am, for your valuable time and giving us insight on QRMP scheme and telling all the members about precautions to be taken, what option to be, all those things. So, and on behalf of Bangalore branch and entire managing committee of Bangalore, I wholeheartedly thank you for full time and all the members who attended for today's session.
Thank you. Thank you very much, sir. Thank you for the opportunity. It is always a pleasure addressing the members. Of course, we gain a lot in the process. We prepare the content, and personally, we get benefit to a great extent. So I'm really thankful for the opportunity. Sir, we have another question in chat box. Can we take that question, sir?
Yeah, ma'am, definitely.
Yeah. So, okay. Say my turnover is more than 5 crore and all my vendors is less than 5 crore and opt for QRMP, then as per rule 36.4, there will be a huge issue for me, right? So, okay, probably what you can do in this instance is you have to make them aware of this invoice furnishing facility and tell them that only B2B invoices, at least my invoices, you upload it in the invoice furnishing facility. I know it is easier said than done. In fact, following up and, making them understand is quite a Herculean task. But yes, on an alternative basis, you have to withhold the tax payment from them and you pay those taxes, and only you have to reconcile that and then make the payments. Many of the corporates have incorporated this methodology, and they also have incorporated clauses in their contractual terms and obligations wherein the tax payment will be withheld, and only after the reflection in the corresponding 2B that would be cleared to them. So probably something like this we need to work out. Or if they're obliging, we can make them aware about this invoice furnishing facility and help them out to upload our transactions in time. So I think either of the one we have to choose to do.
Yeah. Thank you once again, ma'am.
Yeah, thank you so much.
Before we conclude, a small announcement, members. So on Monday 7th from 4 to 6, we have special session on practical issues on Vivad Se Vishwas scheme. So various commissioners and principal commissioners, or 7 to 8 commissioners, will be addressing the session. So I request all the members to please join for the session and get a benefit out of it. And keep listening to Jnana Dasoha web series. Thank you once again, one and all.
Should I take it up? Is it okay? You've concluded formally, but there's a question. We'll take it up because
okay,
I think
no problem. We have time.
Till 6 o'clock. Till 6 o'clock, I'm kind of obliged. So let me do it.
Sure.
So can you explain on IFF a little bit? Okay. So there's a question about what is this IFF? It is invoice furnishing facility. I have opted for QRMP scheme. Thereby, I will be filing my GSTR 1 quarterly. But I have some B2B transactions which I want to upload so that the other party can get the credit. Using this invoice furnishing facility, I can upload invoices, credit notes and debit notes of that particular month between 1st to 13th. Within this timeline, hello, I'm getting a disturbance. Can you please mute? Yes, yeah, thank you. So this invoice furnishing facility, so between 1st to 13th of the following month only it will be available. Within that, if you file your reflection in 2B. Otherwise, he will have to wait till March, till the third month of the quarter. After that 13th, when you file your quarterly one, till then he'll have to wait for that credit. If he's following this, GSTR 2B tracking and Rule 36 for compliance, then certainly it will have impact on his working capital. To do away this, they have provided this interim facility of IFF. Again, it is an optional. There is no compulsion, because once you use this invoice furnishing facility, you will have to reconcile and ensure that there is no double reporting again in GSTR 1. Of course, system validations are expected to be there, but you should not be claiming, you should not be reporting in IFF and as well as in GSTR 1 quarterly. So that is not permitted. So you have to eliminate whatever you have reported in IFF and report only the balance part in GSTR 1. Alternatively, if you don't want to use this, entire transactions you can report in GSTR 1 itself in the quarter. Only thing is your counterparty will get the reflection in a delayed manner. Yes. So will it get reflected in 2B even filed by quarterly filers? Yes. This option is only for quarterly filers. The IFF is only for quarterly filers who can use it for first and second month. Once you use this facility, certainly it will come in 2B of the corresponding parties. Yeah, I think we are done with the questions. Yeah.
Yeah. So thank you once again for your valuable time. Yeah.
Thank you. Thank you.